So, ladies and gentlemen, welcome back to this new webinar from Solarplaza. Already, Sławomir, who's a partner of Advicero Next, is already logged in. So good to have Sławomir. Today we will be talking about how to finance a renewable energy project in Poland in the most tax-effective way. I know we have a lot of investors and APPs tuned in that want to understand how to do it the right way, how to move into the Polish market. So we hope also this content will be very useful and up to date for you. Before we start, and before I, of course, leave the stage right away to Sławomir, I'll just say a few words. Apologies if I went a bit too fast. Quick mention about Solarplaza. 20 years now on the market. So, you know, was probably from our conferences and, of course, for our content pieces, all related to large scale PV. And we've been now, this year actually, we'll be hosting our fourth edition of the Solarplaza Summit Poland. So, looking also forward to seeing you there. Very shortly, practical notes. We also reserve time for Q&A, so please send in your questions. We'll answer them at the end. If you have any technical issues, also send them in the Q&A. My colleague Bo here will also help you in solving it. And yes, we will share the slides and the recordings. Just give us 1 or 2 days after the end of the webinar, and they will be in your inbox. I had the pleasure to introduce Sławomir. He's a partner in tax and legal department and graduated from the Warsaw School of Economics, and he's been active on the scene on the tax advisory since 2007. And correct me, of course, Sławomir, if I'm mistaken, but of course your specialization, of course, is in related to the whole advisory part for both real estate players, but also for in the energy market. So here we go. I think this fits perfectly. And of course, you will tell us, let's say, all of the do's, don'ts, and the implications, of course, on a tax perspective when it comes to cross-border transactions, and also well, effectively to PV, how to manage effectively tax exposure when financing a project. That said, Sławomir, if you agree, I will leave the stage to you. We'll start with the presentation. Once again, feel free to send in your questions. We'll answer the Q&A at the end. And grab a coffee, enjoy the presentation. Sławomir, I will leave the floor to you.
Thank you very much. Good afternoon, good morning to everybody. I've got the pleasure today to speak you a little bit about the tax aspects of investing in very interesting renewable energy sources projects in Poland, and what are the most important tax aspects of such investments. To my person, as it was introduced, I'm a partner in Advicero Nexia, a Polish advisory company, gathering experience since 2007, and I specialized for investments in renewable energy sector, as well as in real estate tax, income taxes, and VAT. Just two sentences about Advicero Nexia. We are tax advisory at accounting company in Poland, providing the wide scope of services for the investors, starting from structuring of the investment, review of the business models of the financial and holding structure, supporting the clients with some negotiations with investors, with other investors on the Polish market, supporting you in case of review of the tax clauses in any agreements related to the investments. And then when the project starts, we support you with ongoing tax and accounting settlements, and with profit distribution, and with exit scenario. We are the member of Nexia International, one of the biggest advisory networks. So in practice, it means that a majority of our clients are international companies, and thanks that we've got experience, and we feel the problems that foreign investors can have in case of investing in Poland. but also it means that if any support abroad Poland is needed related to tax advisory or accounting or legal issues, then in most cases we are able to cooperate with our colleagues from another offices of Nexia International. Okay, if you are interested in these topics on tax and accounting topics, we share our knowledge. We published few newsletters. The general one, tax update. However, we've also got some sector newsletters. One of them is taxation and renewable energy. So if you are interested, just inform us, and we would put you on the and you can subscribe this publication. In case of that you are Polish speakers, then in tax blog and in YouTube channel, we also share our knowledge. We publish some short movies or some articles related to the tax aspects of the Polish market. When it comes to the today's topic, so tax aspect of investment and financing of the projects, I would like to split this topic in these 4 sections. We would start a little bit with presenting you few very important tax burdens in Poland that all investors have faced to. Then we would speak a little bit about the potential ways how to finance the investment and what are the most important tax aspects of this investment, what is risky, what is not risky, what has some tax advantages or disadvantages in case of choosing of particular method of the financing of the project. And then I would like to jump into the very interesting topic related to the profit distribution from both sides. In case of the ongoing investments, when the project is already ready, and how to take back the money invested, what are the potential ways and what are the tax aspects, and also in case of exit scenario, when you decide to sell the Polish projects. At the end, short summary about the does and don'ts for investors. We see pretty often some theoretically small mistakes, but then at the end of the day could give you some troubles and also could be related to some tax risks. In case of any questions, as Nicola said, you can put it, send it to us, and after that, in Q&A section, I would answer them for you. The presentation is planned for approximately 30-40 minutes, and then we would have a few minutes for answering the questions. Okay, so let's start with the crucial tax burdens having potentially big economic impact on the rentability of the project. And the first issue, which is a little bit known in other countries, but pretty specific in Poland, is withholding tax, which could change significantly the profit distribution, but not only the profit distribution, but also any cross-border settlements between entities. So, starting from the scratch, from the beginning, in Poland, we've got the rules related to withholding tax as in many other countries, and the standard rate generally amounts 20% with respect to intangible services, or 19% in case of interest, in case of dividends. So what is important that such withholding taxation relates to all or pretty huge bunch of services of remuneration that you pay to any foreign companies, related and unrelated. In case of tangible services, so let's say that any cost related to the building of the farm, if it's your foreign contractor, then this withholding tax is not due. However, there is huge scope of another services: legal assistance, market research, advisory, and of course interest and royalties, so related to the financing, which are scope to this taxation. And as I said, the standard rate is 20%. However, there is many exemptions or reductions of this withholding tax possible, either based on the double tax treaty concluded by Poland, or internal European Union regulations, so interest reality directive or parent subsidiary directive. And so shortly speaking, in case of intangible services to related or unrelated entities, in most cases the exemption from this tax is possible, assuming that some formal rules are fulfilled. In case of interest, royalties, and dividends, it depends. Sometimes it's exemptions, sometimes the reduced rate till 5 or 10, sometimes 15% as is available, depending on the status of the contractor. However, in Poland, there is two very important local requirements or local specific regulations related to withholding tax. The first one is so-called beneficial owner test. Based on the Polish local provisions, such reduction or such exemption is possible only if you can prove that your contractor is real beneficial owner of such remuneration. So it means that you have to check your contractor and or related party and try to collect supporting documents saying that this is real beneficial owner conducting business activity in such country. Which could be pretty hard to prove in case of any holding companies. So if you've got any holding company in the structure, then you are on the risk that granting financing from such company, you can be obliged to apply 20% withholding tax rate in terms of such interest payments. So potentially, what you can choose, then you can consider to change a little bit holding structure and choose another company in the financial structure having such real business activity in another country, and apply, let's say, 5% of withholding taxation instead of being on the risk for 20%. The second very important rule, which was introduced 2 years ago, is pay and refund rule. And it means in practice that in case you would pay for any related entities passive income, so interest, dividends, and royalties, and within one fiscal year, such remuneration in total would exceed 2 million of Polish zloty, then, as a rule, you're obliged to pay 20% of withholding tax, even if in your opinion all formal obligations are fulfilled. And after that, the company could apply for refund of this collected withholding tax from the Polish tax authorities. So if you plan any payments of dividends, of interest above this 2 million threshold, then you have to consider this pay and refund procedure. There is two ways how to avoid application of this obligation. The first one is apply for special opinion to Polish tax authorities on application of preference. So in advance, you present Polish tax authorities the information that you plan to pay, let's say, interest to your related entity abroad, and the payments would exceed 2 million Polish zloty. You present them the documents related to the beneficial owner status of this company, to the contracts, and after that, Polish tax authorities would issue this opinion, granting you the right to apply this preferential application within the next 3 years. Or the second possibility, the management board of the Polish company can submit special confirmation that all formal obligations are fulfilled and this pay and refund procedure are not applicable. However, it's risky for management board signing such statement, because then they can be liable for any outstanding tax related to such procedure. So withholding tax is one of the most important and crucial aspects of investing in Poland. The second one, it's real estate tax, which is also, as you maybe know, very specific in Poland. Generally, the real estate tax is payable with respect to land, buildings, and structures. In case of land and the buildings, the tax is calculated based on the square meters of plot or the building. However, in case of the structures, the tax base is 2% of the tax gross value of the structure. And what we've got in the Poland, in case of investments in PV, there is a few aspects. The first one is the question, which tax, real estate tax or agricultural tax should be due? Because as you know, the PV investments is generally located on the lands used for agriculture in the past. And then there is the question whether the whole plot should be subject to real estate tax with much higher rates, or the agricultural land should be applicable. Based on the court rulings and some tax rulings, generally the real estate tax is due. However, we are aware that some local tax municipalities accept agricultural tax. So it's a little bit discussion about the management of the risk of the company. And the second question is, when we've got PV investments, what is the structure? And because this 2% value of the structure would be each year payable by the investor to the local municipality. And in case of PV investments, generally it's based on the practice, and court rulings, it was set off that PV, so panels, are not the subject of the real estate tax. However, the foundation and also the building parts of the rack systems, they are subject to real estate tax. Also, the grid connection, this is for sure subject to real estate tax. Internal road fences. What is a little bit tricky and not entirely clear is the question about the rack systems and frames, whether the whole of them are subject or just the building part. And also we've got the problems and discussions about the transformer stations and some parts of the grid. This is something that should be analyzed. This you can always apply to local municipality for tax ruling in order to confirm what is the subject, or in your case for the real estate tax, and what not. It's very interesting question about the battery energy storage systems. So something pretty new on the Polish market, and there's the same discussions as a little bit we've got in the past related to the wind farms or PV investments. We've got now with regard to the batteries and the battery storage systems, and at the moment, there is no clear practice of Polish tax authorities. So, on the one hand, we've got these old regulations related to PVs and wind farms, which we can try to implement with respect to this new investments. On the other hand, still there is possibility to apply for the tax ruling or check what your potential local municipality says about this. In our opinion, for sure, concrete foundations and the building parts of the investments, as well as grid connections, this should be subject to real estate tax. However, in case of batteries, containers, and cabinets, transformers, inverters, we see the chances and some arguments proving that that they are not the subject to real estate tax. So the area of unclearance is pretty high. So depending on the particular investment, depending on your risk aversity, you can decide, or we can discuss with you what approach could be potentially applied. However, what should be noticed is that these regulations related to the structures and taxation of them, this 2% of the value of the structures, would be changed. In 2023, so almost 1 year ago, Polish Constitutional Tribunal issued the court ruling saying that the current regulations related to the taxation of structures are unclear and have to be changed. The court gave 1.5 years for changing the provisions and saying that starting 2025, the new provisions should come into force. And at the moment, what is known that provisions related to the structures would change, but at the moment, the shape of these new regulations are unknown. The Polish Ministry of Finance announced a few days ago that they would publish the draft of the new act in October or November this year. So 2 months before the deadline, and then it will be presented how these new regulations would like. And so in practice, nobody knows at the moment whether the change would be significant. So totally new rules related to the structures and totally new rules related to the investments would be applicable, or it would be just the amendment of the current regulations, maybe presenting some additional breakdowns, how which fixed assets should be subject to this tax. Just few words about the costs related to the investment, because as you can see, during the investment phase, when the cost segregation is done, when the investors include many types of costs, and the proper allocation, the proper booking in the accounting system of this cost would have very big impact on your tax position for the next years. Because on the one hand, we are talking about the depreciation and different fixed assets, so the fence, the PV, the rock systems, containers, batteries, they are subject to different depreciation rates. However, also the different fixed assets are subject to or not to the real estate tax, at least at the current regulations. So the proper allocation of the costs could change significantly the rentability of the projects. Some of the costs should be allocated directly to the particular fixed asset. However, some of them we could a little bit investigate what is the nature of the project, how the specification of the services looks like. And at the beginning of the project, in the investment phase, you've got a little bit scope, at least to speak with your contractors, request for some additional documents in order to prove to have more optimal allocation for your investment for the future. Just few sentences about Polish VAT. Maybe a few special local requirements. We've got pretty strict rules related to the invoicing. But what should be noticed that in 2025, so in the next year, the obligatory e-invoicing system would be introduced in Poland. And starting next year, generally in case of B2B transactions, you would not issue anymore the invoice. The companies would not issue anymore the invoice, but what they would do, they would send a request to the Polish Ministry of Finance, to the central server of them, and all invoices would be issued centralized by Polish tax authorities on the request of the Polish taxpayers. So it would be significant and big change for many companies, which you have to be prepared. In Poland, we've got monthly VAT reports, so-called JPK, JPK, or SAFTS files, which are the list of all transactions. So it also means in the practice that Polish tax authorities see all invoices, because this list contains from the all sales and purchase invoices that the company received or issued. And Polish tax authorities cross-check them on the constantly basis. We've got also rules related to the split payment, and in practice it means that some of invoices for services or for goods has to be paid in different way, namely in case of VAT amount presented on such invoice, this VAT amount has to be paid from the Polish bank account of the purchaser to the Polish bank account of the seller, and this money are blocked. You have to follow this regulation, because if not, then potentially big amounts could be not tax deductible for you. So if you make a mistake and if you make a payment even for few million of euros without using this split payment methodology in case of some transactions, then the whole amount, the whole net amount, could be not tax deductible for you for the future. And it's just ticking in making the bank transfer. It's just ticking just one box, which takes 5 seconds, to be honest. But it's very important to do it, because then it's very hard to correct this, and in some cases it's even impossible to do it. So it's formal compliance obligation, but potentially with big impact on the investments, which potentially some investors at the early stage of the investments are not aware of. Okay, we can jump to the next topic about the financing of the project, and there is few types of financing of the project. Of course, we can give the loan, we can take a bank credit, or we can increase of equity. And on the next slide, there is presented few rules, few tax impacts of them, which should be considered. This second column is this TCLT. Starting from this is tax on civil law transactions, so local stamp duty, local transfer tax, and depending on the way how you finance the investments, this TCLT is due or not. So as you can see, in case of increasing of share capital, or in case of this such additional payments, so some local regulation, this TCLT is due. But if you take the loan, shareholder loan, it's not due. The same relates to the withholding taxation. Because in case of some payments related to the financing, for instance, interest or dividends, or redemption of supplementary capital, then as a rule, withholding tax is due, with potential reductions or exemptions mentioned by me at the beginning of this presentation. In case of, let's say, external financing from bank credit or additional payments, there is not due. What should be also considered, there are some transfer pricing regulations, fin capitalization regulation, and also the exit deductibility of some financing when you decide to sell the company, which are presented on this table. So in details, depending on the given financial structure, it should be analyzed and discussed. So few words about some limitations on tax deductibility of costs in Poland, so of financing costs. So generally, the financial costs related to the interest could be deductible, assuming that the interests are paid or capitalized. Depending whether we are talking about the investment phase or then operational phase, either as write-offs or directly in the P&L. But what we've got in Poland, we've got fin capitalization restrictions, and if the financial costs would exceed 3 million zloty in total in 1 year, paid to all entities, related or unrelated entities, then these rules, these restrictions are applicable. So we've got two thresholds which should be monitored. The first one is this 3 million Polish zloty annually, and the second one is 30% of EBITDA. And this is the maximum amount which Polish tax authorities allow you to consider as tax deductible costs for corporate income tax calculation. In case that these thresholds are exceeded, then potentially this surplus could be tax deductible in the following 5 years, but under condition that also in these following tax years, these thresholds would allow you to do it. So in case of small investments, these thresholds, as a rule, are not exceeded. In case of bigger investments, for sure. So you have to calculate in your business plan potential impact of fin capitalization and consider some optimization. Because there is some exemption for public infrastructure investments. So if the company conducts some public infrastructure investment, then fin capitalization restrictions are not applicable for them. And PV investment or wind farm investments, there are some tax court rulings confirming that they could be considered as public infrastructure investments, and these limitations related to the fin capitalization are not applicable. Transfer pricing, just the information that if you conduct any if you got any agreement with related party on the financing, then you have to be aware that in case of loan is higher than 10 million Polish zloty, then transfer pricing documentation together with benchmark has to be prepared, and you have to be able to prove that the conditions, the financial conditions you applied, are on the level of market ones. Okay, exit scenario and profit distribution. On this slide, you can see some pretty popular holding structures. So let's say that we've got an investor from Germany, which have a few projects in Poland, these Polish SPVs, and in between we've got Polish holding company. All of them has loans, so between grandmother and mother, and SPVs receive the loans directly from the Polish holding company, and then the payments of interest or dividends are done directly to the shareholders. So in case of dividends, as I said, we have to consider this withholding tax rules, and we have to be able to prove that that the entity receiving the dividend is beneficial owner. So the first question is whether this Polish holding company should be put in between or not. Because such entity as a rule doesn't have business activity, doesn't have real business activity, as it's just a holding company. And the second one is about the interest payments, whether indeed such structure is the best one, or the financing should be granted directly from the German entity. Assuming that that we would have two scenarios, so financing granted from the Polish company, then we are on the risk that potentially this 20% could be even applicable, or we can also get 5% if the loans would be granted from the mother company. Some additional regulations related to the profit distribution. Some investors can consider so-called Estonian taxation, Estonian simplification, and Polish corporate income tax allow that such company would not pay corporate income tax as long as the profits would remain in the company. So pretty nice solution for some companies. You have to apply for this. You have to you can choose it in assuming that some formal conditions are fulfilled. However, this solution is not available for everybody, because one of the condition is that this is available only for entities with shareholders being individuals. So when we've got investors with complicated holding structures, then it's generally not possible, but for some investors, potentially very beneficial and nice simplification. When we are talking about the corporate income taxation, we would like to mention two additional aspects. The first one is new Polish minimum income tax, which effectively would be payable for the fiscal year 2024. And this minimum income tax, it's totally different tax as the tax which at the moment potentially could be introduced on the European Union level or OECD level based on the Pillar 2 regulations. This is totally different regulation based on different assumptions and it's totally different calculated. And it's payable should be payable by entities which recognize tax losses or the income is less than 2% of the revenue. In such case, we have to. There are some exemptions, for instance, for startups. So in the first 3 years of investments, it's not payable. But then we've got two possibilities, two approaches how to calculate. The alternative one, so let's start from the end. The company can agree to pay 3% from the of this tax of the operational revenue. So the tax base would be 3%, and the tax rate is 10%. So in practice, 0.3% of the operational revenues should be payable to Polish tax authorities. And the standard rule determining of tax base consists from these three bullets, which you can see on the slide. And it's a sum of operational 1.5% operational revenues, then debt financing costs exceeding 30% of the EBITDA, and also remuneration payable for related entities for intangible services or royalties with some thresholds. So if you expect tax losses or income below these thresholds, you have to be aware also of this new additional taxation of the income. And also the second pretty new regulation is tax on shifted profits, which is also payable if some profits are shifted from the Polish company abroad, and generally the company receiving these profits doesn't pay effectively the tax or pay the tax at the rate lower than 13% in this country. And significant or important part of the revenues of such holding company consists from these revenues received from Polish SPVs. So then it's very complicated to calculate this tax, but in generally we have to check based on the Polish accounting rules some revenues, we have to make the calculation of the financial, let's recalculate even financial statement of this company in order to determine the tax base of such company and pay this tax. Okay, to sum up these few aspects, what investors should do and what doesn't do when considering the investment in the Polish renewable energy sector investment. So from at the beginning, the holding and financial structure should be planned and should be reviewed from the also in case of tax aspects, because it's much easier for everybody to structure this from the beginning, from the scratch, than the change of the transactional flows. Because if something is already set, then it's pretty something even impossible to change it, or it could be related with high costs of such amendments of the structure. So a financial model should be prepared before the investment should be reviewed by the tax advisors and also legal advisors. With in the terms of real estate tax, the realistic cost should be allocated, should be calculated and put in the business plan, and it should be discussed which approach you would like to apply, because as I said, there are some unclear areas of the real estate tax, and at least it should be discussed which approach you would like to apply, whether you would like or you wouldn't like to confirm this approach with local tax municipalities in order to be on the safe position. it should be considered also foreign exchange differences in the plan, because in business plans, at least pretty often, yeah, they are prepared not in the Polish currency, but then the real costs are bared in PLN. So the impact of foreign exchange differences should be somehow considered in the business plan, or you have to apply hedging instruments. With case of withholding tax, once again, this beneficial owner assessment should be done. You should check how you would like to finance, how the financial flows would like, and whether indeed the entities which receive this remuneration are the beneficial owners or not, or whether this pay and refund obligation, so this 2 million Polish zloty threshold, would be exceeded or not. Maybe you can consider to split and grant financing from two entities in order not to exceed this threshold. Regarding the don'ts, so what we request you not to do it, for sure, not to buy the unverified projects. So the limitation period in Poland is 5 or 6 years, depending on the tax. So pretty long time, and so tax due diligence, as well as legal as technical, is a must, because this is the moment then some risk could be detected. Potentially, you can secure yourself in the negotiations with the seller, and also it could be clarified or proper allocate some costs, for instance, related to depreciation or real estate tax. So this is the time when it's possible to do something. When you buy the projects, pretty often it's not very easy to protect you after that. What else? Please don't pay tax liabilities for another entity, or even please don't make a transfers between the entities without a legal title, because then it's pretty complicated to properly allocate this, to properly clear this, and even some of them could be not tax deductible. On you can be liable for tax liabilities if you don't require some compliance requirements. What else? Don't issue the invoices being not agreed with your contractors. In Poland, we've got pretty strict rules related to the invoices. So if the invoice is issued, you have to pay output VAT due on this invoice. So rather, you should avoid the situation when you issue the draft of the invoice, but looking like an invoice, you send it to your contractor, you negotiate them, you issue twice or few times some amended invoice, and after that you agree on the invoice which are paid by the contractor. Because you don't know what your contractor would do with the invoices, which invoice would be reported, and based on the provisions, if you issue the invoice, if you send it to your contractor, you have to pay VAT presented on the invoice. Okay, so it was everything which we prepared for you for this 50 minutes of overview of tax aspects related to the investment in Poland. And if there are any questions, then we can answer them.
Yes, Sławomir. Actually, there are a couple of questions. I think we can definitely take them. I see one already related to the topic of the moment, so batteries, or actually a question from my friend Derek here. What is the real estate, let's say tax basis, or generally speaking, I would also add framework for batteries. When a developer or an IPP puts in or places a battery project, how does the framework currently look right now?
Okay, so according to the provisions, we've got in the real estate tax, there is a link to the building law, and the rules are pretty general. What is the structure? What is not the structure? And when we implement the rules related to the PVs or wind farms, we would say that the building parts of the investment for sure are subject to the real estate tax. So the concrete foundations, if this is something what is outdoor, then this part would be subject. In case of some batteries, just this equipment being inside the cabinet or this containers, then we see the chances to say that the batteries are not the subject to real estate tax. However, we have to consider very negative court rulings related to the transformers, saying that also the transformers at themselves are subject to this real estate tax. The case related to the containers, cabins, this is the question whether they are in any building or they are outdoor. If in case of outdoors containers, it's a high risk that they should be also subject to this metal part of the investments. In case that they are located in the building, let's say like something like warehouse, then we can also try to save them. However, as I said, in 2025, so in the next year, we should expect change of the law. And at the moment, it's not clear how the shape of this new law would looks like.
Absolutely. I think that would also coincide when we will actually see new storage projects effectively coming into phase. And one more question, Sławomir, relates to that holding structure you presented before, because I will add, let's say, it's very tempting maybe to have a holding structure via Dutch holding or Luxembourg holding. These are, let's say, almost plans a lot of times for tax efficiency. The question is effectively, how does the, let's say, Polish tax authority control the effectiveness of the holding, if it's a fictitious holding, if it's in place in those countries? What kind of tests also do you have to prove in order to make sure that this structure can work with a Polish operating company and a foreign holding company?
Mhm. So in case of these beneficial owner tests, the Polish SPV, so the Polish entity paying such remuneration, should be able to prove who is the contractor and what is the status. So unfortunately, the system works a little bit differently because the taxpayer, the Polish taxpayer, has to prove that his contractor is a company with business structure abroad. Then the Polish tax authority proved that it isn't like this. And so this is the reason why this pay and refund limitation was introduced, because Polish tax authorities said, okay, it's pretty hard to check it, to control this, as you said, the abroad structure and the status of the contractor for us. So then the Polish SPV, the Polish company, this is the entity, this is who should be able to justify that indeed it's like this. This is the entity which should possess the documents about the company. And it's pretty funny because sometimes Polish tax authorities ask the Polish company for such kind of documents as lease agreement of the contractor, let's say in the France, or information about the employees, how many employees you've got the company in France, what is the about the pay slips, about about the salaries of these persons, about the employment agreements, in order to verify what this, yeah, this, let's say, French company does, and whether indeed this company performs real economical business activities in the country of the seat. There is also a possibility that Polish tax authorities would contact foreign tax authorities for documents and ask for such information. And it happened, as we know, in approximately 20% of cases related to the pay and refund procedure. It was the official information provided us a few months ago by Polish tax authorities, because they've got such tool that Polish tax authority would contact directly foreign tax authorities and together check this. But mainly the Polish company, the Polish investor, so the investor should be able to prove the status of their contractor.
Perfect. So I think very clear. With that, I think we also filled an hour. I think it was a very interesting presentation. I will remind my colleagues will share it via email, and not just the slide but also the recordings. So Sławomir, thank you very much, of course, for this one. I will also mention that Sławomir also together with the whole Advicero team will be at Solarplaza Summit Poland. It's on May the 9th, 4th edition. So very much also looking forward to seeing you there, and also other registrants there. And if you would like to make use of this discount, here we go. We reserve this one for you. That said, one more mention, of course, not just Solarplaza Poland, but we're also meeting Tuesday, and there is a very project development focus gathering that we're organizing. So in 1 week, less than a week time, and also related to the CE region Solarplaza Summit Romania, which will be hosted on April 24th, aside from our Polish summit. That said, Sławomir, thank you very much again for joining us today, and looking forward to seeing you soon at our summit.
Thank you very much. Have a nice day to everybody, and let's hope to see you in May in Warsaw.
Thanks again. Take care.